Hey everyone, Josh Wilmer here for a fertilizer market update for February 2023. Going to dive right in and first talk a little bit about European natural gas prices. European natural gas prices as of today are around $16 per MMBTU. So if you go back just a month ago, those prices were around the low 20s, and 2 months ago they were somewhere between $30 and $40 per MMBTU. So prices continue to decline, mainly due to warmer weather in Europe and the fact that Europe has found additional gas supplies to meet their current needs. And so the impact of that on the nitrogen market has been substantial. If you look at what it would cost today to produce a ton of ammonia in Europe, just looking at the material cost of the natural gas using that Dutch TTF pricing, puts it in the $500 range. Now, keep in mind, there's other operating and production costs, carbon taxes, and a lot of other factors that go into this, but as a very base cost, fertilizer and ammonia in particular has gotten substantially cheaper. You can start to see that when you look at U.S. values here. So you have both a Tampa value and a Midwest value. Both have been on the decline over the last several months. Midwest ammonia pricing did drop last week for spring pricing, and we would expect that ammonia will continue to be under pressure in the near term here. Moving on to urea, keep in mind that urea is the most widely traded fertilizer commodity in the world, and it's been in a free fall. And so this is souring sentiment across the board with all fertilizer products, and it's leading to buyer deferral going on. So NOLA urea traded as low as $300 at the short ton last month, actually last week. And so that's the lowest prices that we've seen since January of 2021. There's a lot of factors at play here. Certainly there is the cost curve aspect that was just talked about with European natural gas prices coming down. You've seen, as a result of that, Europe is deferring their purchasing. India has also continued to hold off on an additional tender. And despite all this, you're also seeing that China is starting to favor the domestic market over the international market. So not all factors are completely bearish right now. If you take that exact same chart we're just looking at and you overlay some lines with it, that black line is a long-term trend line. And you can see that for multiple times in the 2016 to 2020 range, that line served as resistance, and then it switched over and became support. And then we breached that support back in early January and have been in a complete free fall ever since then. And if you look at that blue box down below, that is the long-term demand zone. And so that is the area that most business was conducted in for a multi-year period. And so the question is, do we start to return back to that zone, or do we bounce back up and try to test that long-term support line again? It's hard to envision an overly bullish view short of some type of a catalyst happening. Right now, the only near-term catalyst that you could really think of is probably the spring application season, short of something major happening, a major weather event or a major geopolitical event going on. When you look at the price of urea, though, and compare it to the price of corn, urea is just absolutely cheap right now. It's phenomenally cheap. And when you look at the last 5 years of barter rates, only one other week out of those 250 plus weeks has the barter rate been this favorable. And so if you're a grower, you should probably think about layering in some urea. And I'm not just saying that just because I'm in the fertilizer business and I probably have some product to sell. It's really because this is a great value right now. You have an opportunity to go out and sell some corn, buy some urea. And keep in mind, this is not investment advice. This is just one man's opinion, but prices are looking pretty sharp right now on the urea front, especially on a barter basis. One bullish factor just to keep in mind is that as a result of all this buyer deferral, the U.S. continues to see a trade imbalance right now. And so when you compare where we normally would be at this point and how much nitrogen content we would need to import, we are substantially behind. And so if we're going to plant 91 to 92 million acres of corn, we're going to need some nitrogen. And if you go back and look at what happened predominantly in Q3 into the start of Q4 last year, we were exporting nitrogen products out of the country, ammonia, urea, even UAN. And imports were down substantially during that time frame, and it led to this imbalance. So you've got this really odd dichotomy right now. You're trying to balance a falling global cost curve against buyer deferral and the fact that you have this trade imbalance going on right now that needs to be made up. And so it's really just a timing game at this point, and when is going to be the right time to buy into this market. And I know it's really tough to buy and be the person who's going to catch that falling knife, but market prices are certainly very stable. And if you are a grower and you have that ability to be able to lock in both your output and your input and lock in a profit, it is a very good time to do that. Moving on to UAN. UAN prices have not been immune to these price drops. UAN on the river, especially Ohio River Terminal values have continued to drop last week in the 315 to 330 a short ton range. And so the price of UAN has lost a third of its value. That's over $160 just since the start of the year. And so even today's prices are $120 below the summer fill value. If you were to take that same chart and overlay really two different periods here, you can see that there was this multi-year trend and trading zone that happened. And then we moved out of that range and we're currently in that blue zone, but we're about to exit out of that given the current price trend. And so the real question here is what happens? Do we stay in this blue trend or do we move back into the historical price range? Again, it's probably going to depend upon that global cost curve. When does buyer demand start to kick in? And how well do grain prices continue to hold up? Looking today at nitrogen products, you can see that both of the upgraded products shown here, UAN and urea, are both cheaper than the price of ammonia on a per unit of nitrogen basis. So if you look at the black line, that's UAN in Cincinnati, you can see that only once in the last 5 years has that happened. And so this is a pretty rare occasion. The most likely scenario here is that ammonia prices continue to drop and maybe UAN holds steady or continues to be under some level of pressure. But you can see that these relationships are way out of whack right now. Here's another way of looking at that chart, and it just shows the cost per unit of various nitrogen products in the Eastern Corn Belt. Moving on to sulfur, this chart just overlays the spot sulfur price against the Tampa quarterly price. You can start to see how that Tampa price seems to be arrived at. Basically, it's wherever the spot price is at any given time, gets locked in for the next quarter, and then it moves on. And so both the spot contract and the quarterly contract are pretty much moving together right now. Looking at those same sulfur prices and overlaying ammonia prices, you can see ammonia prices continue on the decline. Sulfur is steady to lower right now. And so this is impacting most of the sulfur-based products. So ammonium sulfate continues to be under pressure. A lot of that is just the nitrogen aspect of AMS and the fact that urea prices have continued to decline. And then if you look at amthiol prices, they're showing pretty steady here, but keep in mind that price discovery is lacking right now. And so this product doesn't have a lot of liquidity going on right now, and it's likely to face many of the same pressures that other nitrogen and sulfur products are facing. This is an indicative price for the Eastern Corn Belt. Keep in mind that Western Corn Belt pricing is quite a bit lower right now and continues to be under pressure. Moving on to dry phosphates, the price of MAP in New Orleans fell to $550 a short ton last week. That's a $40 weekly price drop. You can see that the current price very closely matches where we were back in the 2021 fertilizer year. And so with last week's price drop, if you look at the part I've circled there in the blue line, the U.S. is now at a discount to the rest of the world. So we are the cheapest market in the world for MAP. The rest of the world is holding pretty steady right now. If you've been following along, you know I've been closely monitoring the barter rate between MAP and corn for the last several months. And the two really moved in lockstep, but given the poor sentiment, given the buyer deferral going on right now, that relationship has fallen apart, and we continue to move towards the lower end of that multi-year barter rate range. DAP prices did fall also last week, but DAP prices continue to hold a premium to MAP, which is unusual. And so moving upriver, this shows the MAP DAP pricing differential in Cincinnati, Ohio. And you can see that MAP is actually cheaper than DAP, and that is really rare from a historical standpoint. So the same issues discussed in the past continue to hold, mainly domestic production issues along with a lack of imports are playing into that spread and differential right now. The price of 1034 has held up. That was a market that was extremely tight, especially as we moved through the fourth quarter. But like most other products, some level of slack has developed over the last several weeks. And a lot of that is just folks have cut back on the amount of production of 1034 that they're engaged in. And so prices are holding steady. But much like the ammonium thiosulfate market, there is a pricing differential between the Eastern Corn Belt and the Western Corn Belt. So Eastern Corn Belt prices are generally a little higher than what you're seeing in the Western Corn Belt right now. Finally, wrapping up with potash, Corn Belt potash did have a winter fill program last month. Prices did reset as part of that, but prices continued to drift lower even after the fill program. And so like every other product, if you look at what the barter rate looks like right now, very favorable. It's at the low end of that 2019 to 2021 range. When you compare it to that black line, which was last year, which I threw out of the range just because it was such an anomaly, you can see how much cheaper potash is on a barter rate basis than it was just a year ago. You can see that currently barge values continue to pressure Midwest terminal values right now. And so Corn Belt values continue to trade at a premium that's well above historical levels. So right now, the Corn Belt's at about a $70 premium to NOLA. You'd expect it to be around a $40 premium given historical values, given the fact that barge rates have come back down off of last fall's highs. And so when the spread is that wide, it generally means that Corn Belt prices are going to continue to remain under some level of pressure until there's some level of a differential that narrows there. Looking at the price of NOLA potash against Brazilian, that spread also continues to widen well off of its historical norm. Brazilian prices since Thanksgiving, really, or December-ish, have held steady, although recently have softened just a little bit, but nothing compared to what NOLA is doing here. So just continue to see continued deterioration in the U.S. fertilizer market, potash included. I'll pop this up, and this is my last slide. This just shows the 6-month moving average against the weekly price on potash. And you can see, just the continued deterioration of that and how far off the current spot price is against the 6-month moving average. So typically you don't see prices start to shift until that momentum shifts again, and you see something where the weekly price starts to overcome that 6-month moving average. So that is all I have for this month. Again, a month of falling prices, poor sentiment, and buyer deferral going on. So let's see what the next month holds, and hope to catch up with you again next month. Thanks for tuning in.